how would you explain the shift toward cash flow underwriting and why it's gaining such traction right now?
Yeah, I think the reasons are multi-fronts.
Okay.
I think in order to get the cash flow data, basically the bank transactions data, lenders or credit card issuers, they need to ask the consumers to permission on that. So traditionally, what that means is that people need to provide the banking credentials.
Sure, sure.
Yeah. But so Plaid is the major players that do the infrastructure on that side. But as more and more people have gone through this experience with Plaid, so Plaid will also have this product innovation that if you've gone through this before, next time you apply for with a lot of lender, a lot of credit card issuer, you actually don't need to provide your bank credentials again. You only have to do the phone one-time password that more people are accustomed to it.
Yeah,
So I think
that's great.
that's an example that why, as more and more people have experienced this, the frictions of doing this has been smaller and smaller. And regulatory wise, the past few years, the government has also been, the regulators basically have been more open to the lenders, credit card issuers using this data for the underwriting, so multiple fronts. Yeah, but I think you're right. It has been really become really popular in the past few years.
So, where are you seeing the biggest gains in approvals when cash flow underwriting is used? Are there like specific consumer segments that are benefiting the most from this?
Yeah, there's a pretty clear patterns there. Yeah. So first of all, the biggest immediate gain is the consumers that don't have a credit bureau file or they have very thin credit file.
Sure.
Maybe they have a credit history only 1 year.
Yeah.
Or they have a few years credit history, but it was only a few credit trade lines. So usually the lenders would not trust much, even if you have a really good credit score, but your credit file is so thin, but they wouldn't trust it. So cash flow data, so just naturally solve this problem. So that's the kind of biggest gain for sure. And also for a lot of other consumers that, with a low credit score, basically the subprime population, we have also seen able to gain a lot of approvals from that regards as well. Because a lot of reason is also, the subprime consumers, they, unlike the prime consumers that have a lot of options, they are more willing to go through that open banking experience. You provide the credentials or the phone one-time password that I just mentioned. Yeah, so that's why it works the best, no file, thin file. And then the second best, I would say, is the subprime population.
Are we still in an early adoption phase here on this? Or is it starting to get into the mainstream as far as credit cards and lending?
Yeah, so I think we're definitely in the early stage. Yeah, I think the technology itself is kind of mature, but in order for the full scale adoption, you need to kind of get integrated very well with the ecosystem players. Yeah, so in terms of just credit, it's good, but you need your marketing channels like a Credit Karma, those kind of affiliates marketing channels, they need to have those data as well in order to use it in a very seamless way. In the back end, you also want the capital market, basically the credit funds, the banks who actually fund your loan receivables, they need to recognize the usefulness of this data. And a lot of times they do recognize, but they want something standardized, like in the traditional bureau data. If you say FICO 700 to 720, they know what it means. They know what's the risk level. But for the bank transaction data, this kind of a standardization haven't been built yet. So in that regards, that's why we're definitely still in the early stage.